I'm Daniel King, Head of Fixed Income at Merchant West Investments and Portfolio Manager of the Merchant West Investments SCI Enhanced Income Fund. The fund delivered a return of 1.41% for the quarter, underperforming its benchmark, the short-term fixed interest composite rate, which returned 2.05%. The average local multi-asset income fund delivered a return of 1.59% during the quarter, according to ACISA data, while the average local bond fund delivered negative 0.5%. The fund's net return over 12 months is 7.1% versus the STEFI composite return of 7.5% and a peer group return of 8.38% over the period. The average bond fund delivered 5.4% over 12 months. The fund's overweight position in long-dated government bonds has been a drag on relative performance during the year. The third quarter of 2023 started off on a positive note as inflation data in the US for June came in at 3% year-on-year, lower than expected. This prompted optimism that the US Federal Reserve is nearing the end of its monetary tightening cycle. The optimism, however, was short-lived as further signs of weakness in the Chinese economy began to surface. Investors continued to be concerned about the state of the property sector in China, despite several new stimulus measures being announced by Chinese authorities. Cash proved to be the top-performing asset class in South Africa, returning 2% for the quarter. Inflation-linked bonds also yielded a positive return of 0.9%, while nominal bonds declined by 0.3%. The South African Reserve Bank remains hawkish amidst a weakening rand and higher oil prices. While we favor valuations on the long end of the South African bond yield curve, we remain sensitive to South Africa's weak economic growth outlook, perpetuated by an unfolding global liquidity shock, which is causing the cost of capital to rise. As such, we continue to diversify our long-dated bond exposure with a sizable low-duration floating rate note weighting in the fund. We have also increased the fund's exposure to inflation-linked bonds during the year, providing greater protection against macroeconomic volatility. Against this backdrop, the fund continues to be a valuable investment proposition to clients given that South African fixed interest assets are attractively priced, both in absolute and relative terms.